Let's talk about it all and what it might mean for you and your money with our friend Lindsey Bell. She is Chief Market Strategist at Clearnomics. Lindsey, I'm kind of putting you on the spot here. I know it. Tariffs. I got to imagine it's probably what your clients are asking you all about. What's our take on tariffs?
Yeah, I mean, tariffs are clearly weighing on the minds of all investors these days. And I think you're seeing that reaction in the market today is a bit of a reflection that there was some hope in the market that potentially Trump would back off of these potential tariffs with Canada and Mexico and China, and we're not getting such luck. So I think for the markets to stabilize or even turn course, it's going to be the tariff narrative that really needs to turn here.
What would be the best possible narrative for our your clients and our viewers and listeners' money, meaning the stock market? If Trump just said, you know what, all tariffs are off for a few months or forever, what's the best possible change in narrative?
Yeah, I think one of the most likely potential changes is a kicking of the can down the road, and that's not the best possible change. The best possible change is that, that we come together and we reduce tariffs across the board for everybody, and free trade is the answer, and it's all about fairness, right? But that's also probably a little bit too rosy of an outcome. I think that the market can and will accept some level of tariffs like we saw in 2017, 2018, but we are really at a different point in time now than we were back then. We have a consumer that is much more price sensitive than they were back then, but we also have corporations that have much higher margins, operating margins, than they did back then as well, too. So I think there's going to be some give and take on both sides, but ultimately we need a resolution so that both consumers and businesses can make spending plans going forward.
And the options, Lindsey. So again, we've seen stocks now move to session lows as the president reiterated both the tariffs on Canada and Mexico and the reciprocal tariffs April 2nd. The same thing happened on the eve of tariffs last month. And then on that day, which we're already hearing reports about, Mexico, Canada, they tried to, come up with ways to get the president to stand down. He delayed it a month. What should investors do? So we had the market weakening and then it came back. Of course, it still created this overlay. Now we're weakening again. We don't know what tomorrow is going to bring. So should they take this at its word and fade everything that would be directly affected by it? Do they look at it as a buying opportunity? What happens if it's delayed another month and then here we go again?
I think this is a moment in time for people to look at their portfolios more broadly, right? We've seen this pullback. We've actually seen February has been a very, chaotic month, you could call it, in the markets. You've seen ups and downs. Don't forget the S&P 500 hit new highs. The bond market to the 10-year yield reached 4.6% before falling off to where we're at today. So it's been a very erratic movement in the market. And I think that for investors, for advisors, and for clients, they need to be looking at their portfolio and really looking at the balance that they have in that portfolio, because over the last 6 years, we've seen the S&P 500 outperform 4 of the 6 years. We've seen technology play a significant role in that. So those areas may have become overweights inside of many different portfolios. If you look at the last month, we've seen the aggregate bond index up 2.2%, helping to offset some of the declines in stocks. But you've also seen international markets do well on a year-to-date basis, whether that's emerging markets or developed markets. So I think it's really a point in time where you don't exit the market. You look at your portfolio and make sure that you're prepared to achieve your financial goals through any economic or market conditions.